Thank you so much, Alvin. And firstly, thank you all so much for taking your time off on a Tuesday night and actually joining us for, just finding out a little bit more about what exactly we do with government-listed buildings and what exactly Dolphin Capital does itself. So let me introduce myself. So I'm Vicknesh. I'm the Managing Director of Dolphin Capital Asia itself. I am not the one who started this whole investment scheme or saved this sinking ship. All I did was to actually analyze why exactly, one of the main points which, talking about German economy itself, one of the main points we should look at is that Germany is the largest economy in Europe, but typically Singaporeans, we have, like I'm Singaporean myself, but we have, and I used to be from an investment banking background, and we used to analyze a lot of projects and stuff and wonder what we could bring into Singapore and get our investors to be investing in. And we wanted to look at very niche products, not the typical investments itself. And we were always wondering, why is it that for Singaporeans, the preferred place of investment was always UK or Australia and some locations like that. Not really Germany, which was like just outstandingly the largest economy in Europe itself, and it's a very stable economy. So that's when we went and we kind of sourced for different projects in Germany, and we analyzed how we Singaporeans could actually get involved in property investments in Germany itself. Okay? So just a little bit about Dolphin Capital itself before I move to the topic about listed buildings and what exactly are listed buildings. I'm sure you see all around, you see government listed buildings itself. But Dolphin Capital itself is one of the top 5 developers in Germany. Turnover of the company is about 1.6 billion, and we have a track record of about 12,000 of such listed building projects which we have done. And this investment was not structured purely for the Singaporean market or the Asian market. It was something which has been running in the UK and Ireland through the pension investment scheme for the past 6-7 years. Yeah? So it was something which we realized this would work great for the Singaporean investors because of its liquidity, and the returns was very exciting as well. So that's when we kind of decided to bring it over here. Okay? And of course, eventually now we are in the midst of setting up Dolphin Capital Japan. Dolphin Capital Malaysia is on the way as well. And Singapore has been great for us, and I would like to really thank Shenton Wealth Holdings for helping us out to really boost this market for us in Singapore, so it allows us to expand throughout Asia itself. Okay, so moving forward, listed buildings. What exactly are listed buildings itself? You hear it all the time. I'm not sure if the investors here are already current investors of Dolphin Capital. If you are, thanks a lot. If you're not, you have an opportunity today. Yeah, but listed buildings itself, they are basically, in our Singaporean context, we would refer to them as heritage buildings or conservation buildings. Here are some examples of conservation buildings in Singapore itself. You've got the old Supreme Court. Another example would be the Fullerton Hotel. But as you know, in Singapore, we have very few conservation buildings because we got a lack of land. So every time there's a particular building which is old, we knock it down and build like a skyscraper there or something. But those who travel to Europe very often, you realize in places like France and Germany, the government like to maintain the facade of the country itself. They always want to restore these buildings which have nice architecture or any importance to it. It could be nice architecture, it could be like someone famous stayed there, or just the area itself. These places become listed. Okay? So, another example is Singapore itself, and this will be an example in a city called Augsburg in Germany. Frankly speaking, it looks like a terribly ugly building, right? It's like yellow and red color. But this is about restoration, and this is about what Dolphin Capital does itself. We are a market leader in Germany. We have firmly established ourselves as a market leader in Germany for listed building refurbishment. Okay? And a building like this, it could have been yellow and red color like many 100 years back, and we have to restore it to make it the same exact color. For example, we did a project in Frankfurt where it was an old army barrack where the building was actually green in color, and we had to maintain it and make it green in color and make it into apartments and sell it back to the German market. Okay? And even though it was unsightly, but the Germans do not invest in listed building because they want to stay in it. They invest in listed building just purely because of a very important thing, which is tax rebates and tax savings. I will explain a little bit more about this whole concept later. It's very different from what we have in Singapore and how we think like. Okay? So restoration of listed buildings itself. In Germany, only 1% of all buildings in Germany is actually listed. They are the face of the city itself. This is another example of a project in Magdeburg. And you can see this got very interesting architecture and stuff. Many Singaporean investors, right now we have a total of about 1,800 investors in Singapore itself. We've raised more than 100 million out of Singapore for our various projects in a very, very short time of time. We've exited more than 20 projects, of which we have done out of the Singaporean investors. And so this will be one of the examples of a project which has been done, but not by Singaporean investors. This was done by the European and the UK pension funds some time back. Okay? Every project which we do has a certificate of proof that it's a listed building. It has a unique serial number which actually says that it's a listed building itself. And a small translation, it says that this building is protected under the Monument Act. Okay? So the exterior of the building has to be always maintained, whereas the interior and the back of the building can be changed up a little bit to make it more modernized. I'll show you a little bit of the interior of some of the refurbishments we have done later. So the government initiatives, you may ask, as Singaporeans, our projects which we do out of Singapore, like for example the Fullerton Hotel and stuff like that, many a times the government gets involved and they do the refurbishment itself. Okay? But in Germany, in a small little city which has just 500,000 inhabitants, the population of Germany is 84 million. But just a small little city like Leipzig, which is the eastern part of Germany, and they've got 500,000 inhabitants, there's 15,000 listed buildings there. Okay? So Dolphin Capital doesn't always do every project. We have a sourcing team and a very strict sourcing criteria to actually do these projects itself. Okay? So that is why you need external developers to come in and actually refurbish these buildings. And for example, the German government, to encourage external developers to come in, they give a very exciting incentive scheme, which is like the tax rebate scheme. I'll explain a little bit more about that soon. Okay, this is, for example, as you can see, actually it's the CEO right there on the corner. His name is Charles. And this is one of the projects which was in Magdeburg, which we did. And that's the condition of some of these listed buildings there in Germany right now. So this is the exact reason why they need external developers to come in to actually refurbish this. But it's a very specialized skill, so not all developers can actually do it. Okay? Government initiative, like I said, it's a priority for the government to actually incentivize people via a tax rebate scheme to make them refurbish these projects itself. So this is part of the tax laws itself. It's not something which we came up with or something. If you look, okay, so if you, sorry. So if you look here, you can, is there like a pointer? Okay, I'm not going to use the pointer, right? So I'll just show the right there. Okay, from the first year to the 8th year, every year, if a German purchases a listed building apartment, he gets 9% of his taxes. I'll explain how this works. He gets 9% of his taxes per annum every year for actually purchasing a listed building. It's not on the total purchase price, but it's on the cost of refurbishment. And from the 9th to 12th year, he gets 7% of his taxes. If you work that out over a 12-year period, it comes up to 100%. So it's very attractive for Germans to purchase a listed building because for the Germans, they will get back the full cost they put into the refurbishment in 12 years. So it's a very long-term thing. The Germans aren't really keen on like short-term investments or something speculative. Their key movement to why they actually purchase this listed building apartments itself is because of this reason. In Germany, right now, the high net worth individuals get taxed about 45%. The high net worth individuals in Singapore, you get taxed about 20%. So unlike us, where we look at where we can park our money to invest and kind of make more money out of it, for the Germans, their priority is to reduce their taxes. So what we sell in Germany is not a property scheme. We sell a tax savings scheme to the Germans. So right now, Dolphin Capital works with companies and banks such as like Deutsche Post Bank, with AWD, where there's financial advisors and private bankers, and when they approach their their private clients, they actually approach them and tell them, this year you paid this much of taxes, would you like to reduce your taxes? And this is how you can reduce your taxes. Because if you look at any newspaper and do any research, the Germans are well known for not being people who are actually property purchasers. They are people who rent their apartments. So that is why this is very different. It's not like one of those developments where we kind of purchase, refurbish, and sell it back to the market. It is sold in a very different way. And this is why it's very inflation-proof, and it's very, even though there's a financial crisis which is going on, in Germany, like what Alvin mentioned, financial crisis in Europe itself, of course. Germany is saving Greece, of course, right now, potentially maybe saving Spain and Italy, and how does the government actually make up this money for which they have actually spent? They increase the taxes in Germany itself. And when they increase the taxes, this is how this whole investment scheme is becoming more and more popular. There's more and more banks which are actually approaching us in Germany to actually sell the listed building apartments. So imagine an example, if a German is paying an annual tax of 50,000 euros per annum, and he purchases a listed building apartment at 200,000 euros, and the cost of refurbishment itself, out of this 200,000 euros, was 100,000 euros. For the tax savings from first 1 to 8 years, they get 9% per annum of the 100,000, which is 9,000 per annum, which they save. If you look at from year 9 to 12, they save 7,000 per annum. So the eventual tax paid will be 50,000 minus 9,000, which is 41,000 per annum. It is very, very attractive for the Germans because if you're looking at that, they save that much of money per annum via their taxes. Above this, they get rental yield, and above that, it's 100% financing for the Germans to purchase these listed building apartments. The banks provide this financing. Okay? So, ownership by the country, like I said, is 41%. So, just to reiterate, in Germany, when we market listed building apartments, it's via financial advisories and banks, not via real estate companies. It's a very different concept. So conclusion for the German buyers, as mentioned, I think any investment, like we mentioned, like when Alvin was talking about his whole due diligence process and stuff, that was one of our priority as well. Our priority was not to bring just an investment opportunity to Singaporeans, was to make sure that there is a defined exit strategy in place. I think that's the most important thing. It's not to put into some kind of a land banking product and then you are in a speculative mood and you just hope that this particular parcel will get some kind of a planning permission. It's to ensure that it's a calculated investment and there is a defined exit in place, which will ensure that the investors will get their money back. So that is why it is key for us to understand how easily this can be sold in Germany itself. Okay? So this is where our exit is, where we purchase the buildings, refurbish it, make it into apartments, and sell it to the German market. I'll show you more examples. So this is pretty much the process flow in Germany itself. When the developer purchased the listed building, we come up with the marketing and sales brochures, like what we do in Singapore. The condominium developer doesn't buy the land, builds the condominium, and then sell. He buys the land, comes up with the marketing materials, and then he sells. After that, he builds. Okay? And then this is an example of a project which we did. This was actually a Singaporean investor project, and they exited within 8 months for this project itself. 6 months actually, for Frankfurt. And they come up with the floor plans and everything. And basically, they assign a particular sales agency like Deutsche Post Bank or AWD. Deutsche Post Bank itself is part of Deutsche Bank, and it has 24,000 agents. Okay? Not everyone obviously sell the listed building thing, but potentially that's where everyone will be heading towards. And once it's 100% sold, we start the refurbishment process. Okay? Some examples of refurbishment itself. This is a project in Leipzig. As you can look down here, right at the bottom of the picture itself, there's loads of vandalism and graffiti which is written there. And this will be after. This is one of Dolphin Capital's project itself. And that's the interior and that's the exterior. Just literally next week, we have 30 investors plus some consultants who are actually traveling with us to Germany to visit all our projects. And these are investors who have invested with us. We've got many investors who have invested with us. Please do speak to your consultants or whatsoever to actually take a look at these pictures and the due diligence trip which has been done and stuff on all these different projects. So that will be the interior itself. Another example, project before and after. The interior before and after. So if you look on the right, if you see the yellow colored thing there, that's actually a balcony. The balcony has been built at the back. That is something which can be done. It can be built in the front, and the front has to maintain the same look. But the back, the balcony can be built because that would increase the rental yield for the Germans. The developer, coming back down to it. Dolphin Capital has been around since 1989. CEO of the company is Charles Smithers. And we've just taken over like a few other companies like SFG Group, which used to be also a market leader for listed building developments. We kind of just took over them to make us much stronger in terms of our acquisition of better projects in Germany itself. Our track record of the company itself right now, it stands at 12,000 projects which we have done. Obviously, turnover of the company would be 1.6 billion so far. And we've also just acquired listed company in Germany which is called 4 Gates AG. This is actually listed on the Frankfurt and Hamburg Stock Exchange. And for investors investing with our investments in Singapore, 4 Gates AG does a further financial assurance. There's a letter for this. You can actually view this letter when you do your own due diligence after this presentation. Okay? And Dolphin Capital Asia would be just a sales and marketing arm which has a presence in Singapore itself. Our office is in Samsung Hub. And we are going to be expanding quite aggressively in Asia itself because any country we go to, it's a very, very different, exciting investment. I think Alvin may have mentioned talking about 12% in 12 months. A lot of countries, like for example in Singapore, a lot of people say, oh, 12% in 1 year. Oh, that's too good to be true. That's very, very high returns. Who thinks there's very high returns? Show of hands. Anyone? That's high returns, right? Yeah, correct. I thought so too, but obviously that's because of the profit sharing part. I'll explain a little bit about how this 12% is generated. But when we went to Indonesia, that's because our interest rates the bank gave is so low. And when we went to Indonesia, we were like 12% per annum, then they were like, oh no, you can't do business here. And that's pretty much it, because Indonesia, the banks itself pay 7% per annum. In India, the banks pay 9% per annum. So, you know, it's just very different markets. You know, when we went to Japan, that's why Dolphin Capital Japan is starting off, and everyone's very excited about it, because in Japan, the banks pay about 0.1%, and when we said 12%, they were like, oh, very good. And I thought it was very exciting stuff for us when we go to different countries, and just to hear how different people receive the product itself, you know. This is something quite important because it shows the credit rating of the company itself. You may not be able to see it very clearly, but it actually shows that Dolphin Capital receives a credit rating of 1, which rates us top 4.4% out of the 4.7 million companies in Germany itself. Okay, so it's a good thing for everyone to know that at least the company is financially stable and stuff. This will be a little bit of an organizational structure. In Germany, we do everything from the property sales to the developments to the property management and everything as well. And plus, obviously, the investments part, which is out of Europe and Singapore. You've got Dolphin International Group, which runs the European market, where we are pension approved and stuff. I'll show you that a little later. We have a few funds which are run out of Luxembourg and stuff as well. It's a 100 million euro fund, which is by Zion. And Findor is a fund which is run out of Germany. Okay. Like Alvin mentioned, it was one of the awards we just recently received. Last year I was nominated as one of the most promising entrepreneur of the year, but this year this was way better for us because in a very short while we got Best Foreign Enterprise during the SME One Asia Awards, so which is great for us. And on the news, obviously in Germany we are always on the news. That was a project which we did in Neustadt. It's called Villa Windsor. The big man on the left is actually Charles. So that's one of the projects we have done. This was a project which was done, I forgot the exact location, I think somewhere around Frankfurt area. And this was actually done by the Chinese investors who actually bought this listed building so as to convert it to student accommodation for Chinese university students actually. It's a project in Frankfurt as well. This was in the Malaysian newspaper, and this was in the Business Times recently after the award thing which we actually got. Coming down to the whole 12% thing, because I think that any investment itself has to make sense. It has to make sense, why is it 12%? And how is this 12% actually paid out? Because it can't be like, 12% returns and then it's through the funds which we have raised or something like that. So I believe that every investment has to make sense and it can't be speculative and it's by hope that we raise some funds. So this is a typical example of a project we do out of Germany itself. So before the project comes into Singapore for the fundraising or anything where investors can purchase these buildings, in Germany itself, the sourcing team goes and finds a project. So this is a project which you saw earlier. Sourcing team in Germany, the head of sourcing, his name is Axel. He goes, finds a project which is, for example, 400,000 euros. Okay? This is the purchase price of a project in a really bad condition. Okay, so this is from the seller saying, okay, I would like something like 400,000 euros for this building. Okay, I know 400,000 euros sounds very, very low by Singaporean standards, but a project in Leipzig like that, a building with 10 apartments, 400,000 euros for that kind of a state, it could be very, very easily acquired. Okay, and then he goes to the bank, and then because of the relationship with the bank, in Singapore, for example, we call it indicative valuation. He goes to the bank and gets an indicative valuation from the bank that he'll ask, okay, if we refurbish this factory or whatsoever into 10-bedroom apartments, how much would you value it? So he goes to the bank and then he gets a valuation of 2 mil. Dolphin Capital will never do a project unless it's at least 4 to 5 times the purchase price. It has to be 4 to 5 times the purchase price so that it makes sense for us to be paying investors out and for us to actually carry on with the project itself. So when this whole process is done and once it's sold to, if you remember the earlier process, once it's sold to the German market, it's the same as in Singapore. When you buy a condominium, does the developer use his own money to build a condominium? No, he uses your bank disbursements at different disbursement levels to build the condominium. It's the exact same way it works in Germany. So investors go into first charge, and the first disbursement from the bank, you could ask for documents on this, it's actually all shown. The first disbursement from the bank after all 10 apartments are sold is 30%. 30% is the first disbursement the banks give Dolphin Capital in Germany. Second disbursement will be 33%. Third will, that was supposed to show third disbursement is supposed to be 36.7%, and so on. And then it's, of course, it just goes down after that, you know, at different stages of the development itself. Okay? So this is how investors are actually paid out. It's very, very important to actually understand this. 112% returns to the investors is 448,000. The funds which are raised out of any project, let it be out of Singapore, let it be out of Japan or Europe, the funds which are raised is for the purchase of the building, not for the refurbishment, because the refurbishment comes from the German side. It has to come from the German side so that they can get the tax rebate. So it's only for the purchase of the building itself. So if we are returning back investors 448,000 and the investors are in first charge on the building, we would use the first disbursement from the bank to pay the investors out, and the investors exit and the bank goes into first charge. So this is why it is so easy to have an exit within 1 year, and it's a proven concept over many years. To have an exit within 1 year, it's because of this exact reason. Because investors don't stay till the whole project is refurbished. You only stay till the building is bought and it's sold. Okay? So I hope that was clear enough. Not to worry, all our consultants are very, very familiar with this whole the breakdown and how exactly each project has different kind of a value and project worth, right? So everyone is very familiar with this, so you can ask them about this to ask more questions, okay? This is just to show a little bit more that it's pension approved. This is one of the pension trustees in Ireland itself. So we work with 3 of the top pension trustees in Ireland and a couple of the top ones in UK itself. So these pension trustees allow their investors to use their pension money to actually invest with Dolphin Capital. So it goes through very, very stringent due diligence process for something like that to happen. A sample project. This project, I'm just trying to show you a sample of it. This was actually done out of Singapore itself. As of today, it is actually sold out. This was something which was launched about a couple of months back, but as of today, it's already sold out. But I just want to show you a sample project itself. So this was a project which was done in Berlin itself. It's a very beautiful, massive project which is done in Berlin. The investors next week are actually going there to take a look at this project. Okay, and this is a reason why we have cemented ourselves as one of the market leaders in listed building refurbishment, because this is a very big project in Berlin. It's in the papers all the time, and Dolphin Capital got the rights to do the listed part of the project itself. So it's about 161 units, and the eventual project worth will be about 110 million euros. Okay, this is the state of the building itself right now, and as you can see, it needs refurbishment, right? So it's in a very bad state right now itself. Interior looks like that. So here, I wish I could use the pointer, but the thing is that here, the squarish little bit in the center, that is the listed part of the building, of the whole development itself. The whole development is called Weserstadt. And that's all new build around it, but the center bit is a listed part which can't be broken down, and that's why Dolphin Capital has been actually taken on to do this project itself. So this will be the view from the project itself, looking opposite. The interior, they come up with all the artistic impression of it, how it would look like eventually. It looks pretty nice actually, because this is like a grade A project because it's right in front of the lake, you know. So that's how it actually looks like. So this one, like I said, it's already fully sold. So what we do, especially for the Singaporean market, is every time a particular project is sold, we bring in another project. So it doesn't really make a difference because it's the concept. The returns, there's not much of a change at all. So it's the concept of the sale itself. So we have got a pretty good track record, as we mentioned. We've done many, many events in Singapore. We've got more than 20 projects exited. From now onwards, every month we would have 3 projects exiting because of the way the investment scheme itself. So that's why, like I said, we've got an unparalleled track record itself in comparison to any other products in the market itself. I'm not comparing with like REITs and stuff like that because it's a different asset class. But in terms of alternative investments itself, I think we are pretty much right there. Hear from our lawyer, because I want yourselves to actually hear from our lawyer in terms of especially the funds itself, how exactly the funds move, and how exactly we put securities in place and ensure, because as you know, Germany has a very mature legal system, so everything has to be in paper and everything is very, very legal.
My name is Uwe Bottermann. I'm the managing partner of the Berlin-based law firm Bottermann Karami. Our law firm has many years of experience in international real estate transactions. Therefore, Dolphin Capital chose our services for their real estate investment projects. We maintain individual client accounts for each Dolphin Capital project in which we receive the investors' funds. This means that the investors' funds are kept separate from our business account, Dolphin Capital's business account, and the monies of other investors from other projects. We are instructed to keep the investors' funds in the client account until everything is in place to release the funds to Dolphin Capital. This means that we pay out the funds to Dolphin Capital only once the agreed securities for the investors are in place.
Okay, so I guess with that, I hope that in the short while which I spoke to you guys, it's like I kind of managed to explain a little bit of what exactly listed buildings were, who exactly Dolphin Capital is, and about the investment scheme itself. So I'd like to thank you all for your time, and I'll just pass the mic back to our marketing partner and the MD of Shenton Well Holding, Alvin Leong. All right, thank you all for your time. Thank you.